Welcome back, everybody. Today we're looking at General Dynamics, stock ticker GD. And a quick overview of the company. They are a $66 billion market cap, so they are pretty big. Their forward yield is 2.2%, so definitely higher than the S&P 500, which is sitting about 1.5, I think. Their forward PE is 18, and that's pretty realistic. And I would say it's not a too big of a premium compared to the market. I think that's right in line with the S&P 500, and in the last year they are up 18%. You can see with the whole thing going on in Russia, they had a huge spike up, and then they kind of consolidated over the last like 5 months. Yeah, and then so taking a look at their dividend, they like I said, 2.2 forward dividend yield. 41% payout ratio, so that's really what we like to see. Anything below 50 is really good. And then 9% dividend growth rate in the last 5 years. That's really good. We like to see double digits, but 9%, that's still really good. That's definitely beating inflation. And then General Dynamics is a dividend aristocrat. They've been paying consecutively or increasing their dividends consecutively for 27 years. So with all that, let's jump into the business. So General Dynamics has 4 business segments: aerospace, maritime systems, combat systems, and technologies. And the first one I want to highlight is their aerospace segment, which is Gulfstream. So this is a luxury private jet that a lot of billionaires own, obviously, and you can see Elon Musk even owns one, and they're just a luxury private jet. I mean, the billionaires love them. I mean, look at the interior on these. They own this. I think they bought this back in the 80s, so they've had Gulfstream for a long time, and they continue to update. Like they are unveiling their G800 that will come up, I think, in like 2024. So they're continuing to make innovations in there. And then the next business segment is their maritime systems. And that, so they make these Arleigh class destroyers, as you can see. They're huge ships. They have these huge shipyards that they make these. I think they make about 10 a year. And as you can see, these are huge ships. These are huge government contracts that they get, and it's nice consistent revenue. I mean, as long as the U.S. is still a country, we're going to be worried about like building up the military, and then companies like General Dynamic definitely benefit from that. And then another part of this like maritime systems is their submarines. So they have like Virginia and Ohio class submarines that they make, and these are huge. I mean, just look at these things. Yeah, I think these are made in like Maine, pretty sure. And as you can see, they're huge. Just another thing, as long as the U.S. is still a country, they're still going to be ordering these. The military obviously could use them, and as long as General Dynamics keeps making them, they'll keep buying them. And then the other business segment is their combat systems, and the the main thing or the main staple of the combat system is the Abrams main battle tank. This is the main battle tank that the U.S. uses. And then a couple of other things that they use are like strikers. These, I don't know, I guess you just call it a striker. These like mini tanks. And then another thing are these light armored vehicles. You see, these are pretty popular. Like anytime you see a war movie or anything like that, and it's nice to see that General Dynamics is actually the ones that make these and profit from them. And then General Dynamics' biggest business segment is definitely their technologies, and I'll highlight the revenue in this segment later. But this entails like any communication that you see for the military, whether that be like radio communication, like maritime ships communicating with each other, radio, even like mission control. They're vital to communicating like on the front line and like headquarters and all that. That's where this steps in. And then yeah, and then like with their space division, this is how they communicate with satellites, and or the government and the US military communicates with satellites and all that. So now that you have an understanding of their business segments, let's dive into their financials. So as you can see, this big jump was from an acquisition, so kind of ignore that. Going past the acquisition, you can see revenue is nice and consistent. It's kind of cyclical with these big boats. Sometimes you get a big order or not, and then that kind of affects the earnings per share on a quarterly basis. But annually, you can see nice, flat, and consistent. But the one thing I love about General Dynamics is the earnings per share growth. So as you can see, it's not like almost every quarter, year over year, it's going up. You see, and it's kind of, I guess it's kind of consolidated a little here, like flattened off, but they have an excuse with the lockdowns and the government priorities shifting a little bit in 2020. But ever since then, they're still continuing to rise. And then as long as the U.S. military is still around, which obviously it will be, companies like General Dynamic will benefit. And then the reason their earnings per share growth is so high is from these share buybacks. So yeah, as you can see, like in the last 12 months, they bought back almost 2% of their shares outstanding, which we love to see. It's just another way to return capital to the shareholders. And then, so this is the earnings report. This is the period ended April 3rd, as you can see. So this is the most recent one. And there's just a couple of things that I want to highlight from it. So I can see revenue is essentially flat. It's only a $3 million difference. You had 9.3 billion in 2021, and then another 9.3 again in 2022. Very consistent. And then their operating earnings were actually down 3%. I feel like they highlighted that it was from raw materials cost, but with them paying down debt last year, their interest expense was only 98 million compared to 123. So with stuff like that, you're able to actually, net earnings did increase 3.1%. And then or adding on the share buybacks that they did, their earnings per share were actually up 5.6%. So they went from $2.49 in 2021 this quarter to 2.63 in these trailing 3 months, or this last quarter. And that's highlighted in these average shares outstanding. So they went from 285 million all the way down to 279, which we love to see. It's just a way to increase earnings per share and stuff. And then I kind of want to highlight their balance sheet. So this company is very financially healthy. They have about $3 billion in cash and cash equivalents, and only about $10 billion in long-term debt. So very manageable. You like to see companies have more cash and cash equivalents than long-term debt, but General Dynamic, it's a very stable business. I'm not worried about this at all. And then coming down to their cash flow. So as you can see, their cash from operations was 1.9 billion, and then their capex was only 141 million. So that results in about 1.8 million, or 1.8 billion, excuse me, in free cash flow. And with that free cash flow, you can see they paid 330 million for the dividend. They bought back about 300 million of common stock, which is share buybacks. And then the rest of that money, of that 1.8, they just added to their cash and cash equivalents. So cash and cash equivalents went up from 1.6 all the way up to 2.9. I feel like they're just saving with the whole situation in Russia. Their share price went up. I feel like they're just waiting for it to maybe come down just a little bit more to start buying back more shares like they want. And then another thing that I want to highlight about this business is their backlog. So their backlog of recent is $87 billion. And like I said, their whole market cap, let me go back. Their whole market cap is 66 billion. So they're like, these are orders or like revenue that they haven't collected yet, because they can only produce a certain amount of tanks and all that at a time. But the army has ordered them. So their backlog is $87 billion. So they are, I mean, I feel like that revenue, for at least the 2 years, they have funded revenue essentially, and you can see this funded backlog is right around 70 billion. So they are well set for the future. And then yeah, so that's what I want to highlight about the earnings report. I really like seeing a backlog for these military contract companies. It just shows you how like valuable their products are, and that the government is actually ordering them. So yeah, circling back, I feel like you can't go wrong with buying General Dynamics. I would like to see the stock pull back maybe to below 200. I know there's a lot of momentum in it with the whole situation in Russia, but like I said, you just want to see this stock pull back a little bit, get a higher dividend yield. Or under 200, I don't think you can go wrong, especially with this consistent earnings per share growth and their dividend raises. If you're a long-term investor, this seems like a no-brainer. Um, yeah, and actually their 5-year is actually essentially flat. They're only up 17%. You can see they basically traded sideways, and then the lockdowns, government shifted their priority, and then they've kind of rebounded, and then the whole situation in Russia. They're basically flat 5 years. So from a 5-year perspective, it's actually a pretty good time to buy. It's never a bad thing for a stock to take a breather. I mean, like you said, their earnings per share were still growing. So you're paying the same price essentially throughout this time for more earnings, which you love to see. And then their 10-year paints a better picture, about 262%. That's right in line with the S&P 500, but you're also getting a higher dividend yield than the S&P 500. So that basically covers General Dynamics, stock ticker GD. If you like this content, make sure to subscribe and like. It definitely helps the algorithm. And then I'll see you guys in the next one. Peace.